Greetings, everyone. This is Tanya Saunders. I'm with Mid-Tier Advocacy, and I wanted to welcome you to our webinar. I hope that you're all doing well. We have an exciting presenter for you today. If you're having any difficulty in hearing my voice, please enter your information in our chat box. Hopefully, everyone can hear me. I want to first thank our board of directors at Mid-Tier Advocacy. I know that some of them are going to be on the call today. In addition to that, we are hosting and very pleased to have with us the Small Business Administration District Director, Mr. Antonio Doss. He will present soon. However, in the meantime, let's talk a little bit about Mid-Tier Advocacy. Mid-Tier Advocacy is a 501c3 nonprofit organization, nonpartisan, that consists of small and mid-sized firms. We try to leverage the collective voice of our member organizations in order to impact policy that affects their growth and sustainability. So what is mid-tier advocacy? Well, we operate, again, as the collective voice for mid-sized firms, but we have been advocating for policy and changes over the past 10 years to help businesses that are beginning to grow to continue to grow. And one of the challenges has been, once you're no longer small, you're considered other than small. And there is a large gap between that smaller concern and the major million-dollar corporation, or should I say billion-dollar corporations. And again, I am Tanya Saunders. I'm the owner of Washington Premier Group and also the founder and chairman of Mid-Tier Advocacy. The reason we have come together today on this particular webinar is to look at the Small Business Administration's Mentor Protege programs. There have been some changes recently that we would like to highlight. And just so you know, these slides and presentation will be available at a later time afterwards. I want to also do a little housekeeping before I go too much further, and that is in respect to your mute button, if you would kindly stay on mute during the presentation, that would be appreciated. We will try and answer questions both during and after the presenter is finished. And the way you can respond or ask questions, you simply use the chat box, and I will try and recognize you throughout the presentation. Our featured speaker for today, Mr. Antonio Doss, as I mentioned, is the SBA's district director, and as such, he has a team that provides technical assistance to SBA's largest portfolio of firms that participate in the 8A business development programs, as well as other accomplishments in the issuance of more than $6 billion in contract offer letters annually. He oversees the delivery of SBA small business financing products, contracting programs, entrepreneurial coaching services throughout WMADO's service territory, which includes the District of Columbia, Northern Virginia, and suburban Maryland, an area with a gross GDP of $530 billion, placing it among the nation's 5 top producing regions. And prior to his current role, Mr. Doss served as director of the SBA Office of Grants Management, where he administered a $250 million portfolio of cooperative agreement grants from 2004 to 2011. As Associate Administrator of SBA's Office of Small Business Development Centers. He led the SBA's largest business coaching program, overseeing the 110 million Small Business Development Center grant programs in its 900 service centers located across the nation and the U.S. territories. But more importantly, he is a friend and has been a champion in the field for many, many years on small businesses, as well as assisting them with their growth strategies. And at this time, I would like to turn it over to Mr. Antonio Doss so that he can share with us a number of the changes that you can expect in both the Mentor Protege program as well as the joint venture program and other issues.
Alrighty, good afternoon, everyone. Great to be able to have an opportunity to share with you today. I want to go over a number of different topics related to, actually, if we go to the slide that has the discussion topics, that'll be a great place to start. So what I wanted to cover today is some information about recent changes. We had a series of pretty sweeping regulatory changes at the SBA related to a lot of our government contracting programs. And so today I wanted to focus on the Mentor Protege and the joint venture programs, and then also highlight some things related to the 8A program because there's a significant change there. And then lastly, some of you may have used last year the Paycheck Protection Program or our Economic Injury Disaster Loan Program. I wanted to give you an update on where we stand with regard to those programs. So we could go to that slide, and then we can go one more slide over. So just to kind of set a baseline with regard to the All Small Mentor Protege program, one of the key elements of the Mentor Protege program is really it's a program that is designed to help small businesses be able to gain skills in areas that they may not necessarily be that great in at this point. And one of the really cool things I've learned about a lot of business executives, entrepreneurs, is that they have a willingness to share their learnings, a willingness to share some of the challenges that they ran into along the way. And many of them have decided that they want to give back and they want to help another entrepreneur who's traveling down a path not have to go over quite the same bumps and potholes that they may have encountered on their way. So what they do is they agree to serve as a mentor in a mentor-protege relationship. And so that mentor-protege relationship is really a pretty key one. And it's really designed to help the smaller business be able to get access to more knowledge, more skills, more assistance in areas where their capabilities are a little bit limited at this point. There's a component to it that relates to contracting opportunities, which kind of comes into play with the joint ventures. In order to use the SBA Mentor Protege program, you have to be a small business, and you have to be small either in your primary NAICS code or in the secondary code, which is where you're really trying to work on your business development. I mean, the good news is that there's far many small businesses than there are businesses who we classify as other than small. And we don't say large or anything like that, but they're other than small once they outgrow the small business category. So if you're thinking about going this route, it's not a very difficult thing to do. What you're going to do is identify a mentor. And once you have a mentor established, somebody you want to work with, you're going to create a mentor protege agreement. You're going to come on to SBA.gov's certified.sba.gov website, and you'll complete your application there. Now, in terms of the mentor, one of the things that's kind of interesting about this is sometimes we get asked the question, do we at SBA get involved in helping you as a small business identify a mentor with whom you can establish a mentor-protege agreement? And the answer is, we really don't. I use the analogy, we're a lot like the wedding officiant who meets you at the front of the altar someplace and says, do you take this person and do you take this person? And once everybody says, I do, that person then pronounces, you're now, married. And so we don't do the matchmaking. We've actually talked a little bit about, whether that's something we could do, but that was something we were literally talking about around this time a year ago. And then, of course, other events overtook a lot of our activity. And so it makes it a little bit more difficult for us to do those kind of things right now. So we haven't decided to continue with that area right now because we just have bandwidth challenges to take on anything new right now. So let's go to the next slide. So I want to cover some of the changes. Again, these are regulatory changes that all took place in November, just literally 2 months or so ago. And one is we consolidated the 8A mentor-protege program into the all small mentor-protege program as one program. For years and years and years, the only mentor-protege program that existed at SBA was through the 8A program. So if you were not a participant in the 8A business development program, you could not be a mentor to anybody in an official capacity or a protege with a mentor in any capacity officially, because that was one of the key requirements. And we've got a great quick poll up here, which is actually helpful for us to get a sense of where you stand with your mentor-protege relationships or potential ones. And as you vote, I'll just continue a little bit into this. So one of the things that Congress did was they, probably about 7 years ago, required SBA to establish more entities like women-owned businesses, veteran-owned businesses, who could become part of this mentor-protege program. And they asked us to use that mentor-protege program that we had with the 8A program as sort of the foundation of what we would do for the other programs. In fact, we were to mirror the new programs based on the 8A business development programs, mentor-protege program. And so that was part of how we ended up going to the direction that we did with regard to establishing this new program. So over the last several years, we've been adjusting the program. Excuse me. Oh, actually, we got poll results. Federal contractor, yes, 40% are, and 16% not. And then are you interested in becoming a mentor or a protege? We got 20% yes and 8% no. So it's interesting, the percentages of the mentor protege is about half as what the general poll results are about the federal contractor part. So good feedback. So over the last several years, as we've modified and adjusted the program, it just became clear that from an efficiency perspective, we had really mirrored the programs close enough that we didn't need to continue to have two separate programs. So what that means from an internal perspective, and to some extent for you as well, is if you're applying for a mentor-protege program approval, that normally, if you were an 8A firm, that approval process took place into the district office and went through our process, and we would approve it at SBA, but it would start at the district office. The all small mentor protege program was always approved in our headquarters. And so now everybody's going through the headquarters approval process. So there's no application submission in person or anything with us directly at the district office level. Another major change, of course, in this whole process was the ability to establish the NAICS code in a secondary, to establish a mentor-protege agreement in a secondary NAICS code. And then the huge one is that we eliminated the joint venture approval requirement for competitive awards. Now, we were approving competitive awards and non-competitive awards or sole source award joint ventures to firms in the 8A program. And that was an activity that we did in the district office that we are ceasing to do. Those awards are now solely being done based on you as a business owner and your business partner who's a part of the joint venture. So you don't come to SBA for that. But one of the things that I think is really, really important is that you understand what you're getting into with both the joint venture as well as the mentor-protege. So here's the thing with the mentor-proteges and the joint ventures. They are relationships. And like any relationship, I used the marriage example before, you kind of want to know who you're dealing with. Everybody who wants to be your best friend and help you in your business is not necessarily fully looking out for your own best interests. Some of them wear the clothing of a wolf at night, and you want to be careful who you decided to hook up with as a mentor and a mentor-protege relationship, as well as a joint venture relationship. And so I strongly encourage you to make sure you're using language in your agreement documents that helps protect you on that. And I'll talk a little bit more about that in a minute. A couple other changes. One is that we've allowed a little bit more flexibility on the limits of the joint ventures and the mentor-protege agreement. So you can now have a mentor-protege terminated within 18 months. Using that marriage thing again, it's like an annulment, and so it doesn't comp against one of your two relationships that you're eligible to have. Probably the big one in here, though, is the joint venture 3 and 2 rule. So we used to restrict how many awards you could get within a certain time period, and now we're saying we're not going to do that. So you can go after as many business opportunities, as many contracts as you can identify, and if you're successful, you can get as many of those in that 2-year window, starting with the date of the first award. So that's a big change from where we were before, because we used to only limit it to 3 in that 2-year period. Okay, we can go to the next slide. So a joint venture, again, basically you're tying 2 people together, 2 businesses together, really for the whole objective of going after a specific contract. And when we looked at joint venture requests, typically we were looking at a specific contract as opposed to a blanket. You may have a little bit different approach with that, with SBA not being the approving entity for those now. So joint ventures, they're really a function of an 8A firm or another small business, if they're not in the 8A program, that doesn't have the capacity to perform the contract on their own. If you can perform the contract on your own, there's no need to have a joint venture. You could prime it and perhaps get that entity to be a partner with you. The joint venture arrangement has to be fair, has to be equitable. One of the things that you'll see on the very last bullet on this slide is we recommend that you take a look at our agreement template that is listed on our website. If you go to our All Small Mentor-Protege program, there's a tab there that speaks to joint ventures. And that language in that agreement is something that we fine-tuned over the years. And a lot of it is there situated the way it is to ensure that the smaller firm, the small business or the 8A firm, if that would be the case, has control over the situation and that they're not being used or manipulated or otherwise taken advantage of by a larger, more sophisticated entity. So it has to be a benefit to you as a 8A company or as a small business. And the 8A and the small business has to bring some significant resources to the table. We don't want to have a situation where, because you're entering into a mentor-protege relationship and then a joint venture, that larger business can help you go after awards that are set aside for small businesses. But what we don't want to have happen is for a large business to essentially team up with a small business who has no real capabilities, no real knowledge, no real value that they're bringing to that contract opportunity. And the large business is basically using the small business as a pass-through. That's a big, big no-no, and that causes a lot of issues. It's something that we have always fought against as part of our advocacy for small businesses, is to make sure that the small business is not being manipulated in that way. So the only joint ventures that we are now approving are for sole source joint ventures in the 8A program. Any other joint venture, again, we're not doing the approvals on those. Okay, we can go to the next slide. Thank you, Tana. So let's switch a little bit and talk about the 8A program. I know a lot of people have an interest in the 8A program. Many people have decided that it's something to get into. A lot of times people will talk to other business owners in their peer group and say, hey, you ought to get in the 8A program. So I want to point out a couple of things particular about the 8A business development program. And, this graphic speaks to how much success should you expect. And there's some things to this that are different than just getting an MBE certification at a state level, or if you're in Virginia, getting a SWAM certification, or any of the other small minority designations that the state and local agencies have. It's even different than getting certified as a small disadvantaged veteran-owned small business, or a HUBs-owned small business, or a women-owned small business. The big differences are two things. One, this is a time-limited program, 9 years. The other ones, once you get your certification, assuming you don't all of a sudden get really, really large quickly, you can ride that certification for a lot of years. This one only has 9 years to it. And this one also comes with a business development assistance component to it, which is conducted through people in our district offices that have the position of a business opportunity specialist. And so the key thing for me a lot of times is your readiness for the 8A business development program. Sometimes people look at the eligibility and equate that to readiness, equating that to it's time to go and apply. That might be the case, but let me talk a little bit about how that readiness component may come into play. So it's got a series of questions here in the box, like how long have you been in business? We actually have a rule that says requirement that you have to be in business 2 years. And you can actually apply for a waiver. You can have been in business for a year and say, I'm good enough to jump in the 8A program right now, and I want to get a waiver. As we talk about these other questions, you can see whether or not that will be a good move for you. Do you have revenue that you already have started to book under your primary NAICS code? Maybe you have a little bit, maybe you have a lot. The more you have, the better you've got a series of experiences, and you're building past performance. It doesn't all have to be at the federal level. It doesn't have to be at the prime level. It can be at the sub level, but you're building that book of business. You're building that experience. But then really, how extensive is your government contracting experience? Have you worked on a lot of federal work contracts? Have you done mostly state and local government? Have you done more private industry? We've got companies that have done private industry for a long time and decided, you know what, let's diversify and come into the federal space. That's okay too. Probably the biggest question is, what level of success do you want to achieve? And what does that success look like? And if you look at this little bar graph with the swooping green arrow going up, that's an indication of revenue, it's an indication of asset size, it's an indication of net worth, it's employees, it's wealth, it's whatever you want it to be. But depending on where you are when you start on that curve may help influence where you go with it. And if you get in the program too early, and this will probably sound a bit odd because here I am, I work for the Small Business Administration. Most people who work for an organization are always selling their product. This is one product that I don't sell over aggressively because you only have that 9-year period. And if you get in it too early, we've seen time and time and time again that the satisfaction level of being in the program is not as strong, because a lot of times the businesses don't have as much experience. They haven't stubbed their toes enough time to really appreciate some of the things that they're gonna learn. They don't have that experience set with them. Many people think once I get in the program and I get my certificate saying I'm approved to be in the program, that green curve will not only look like that green curve, but maybe it'll even swoop up higher and more aggressive in its growth. It's usually not the case at all, unless you've already done a lot of homework, unless you've already started building relationships, unless you've already got some federal contracting agencies and buying activity personnel who know you, that you don't have to introduce yourself to all the time, and know your capabilities and are willing to trust that you and your capabilities are right for the type of opportunities that they have. When you have that in place, then yes, you can do really, really well. So the question sometimes is, do you want to take a $500,000 business and grow it over 9 years into a $2 or $3 million company? Or are you looking to take a $2 or $3 million company and grow it into a $20 or $30 million company? What's your success parameters? Where do you want to be, not only in the 9 years after this program, let's say 2030, but where do you want to be in your business in 2040? And again, those with more experience seem to do the best. So if you're out on the fence with that, feel free to talk to any of us at the SBA. Feel free to talk to any at our resource partners, including the Procurement Technical Assistance Center, which work a lot with applicants that are considering the 8A Business Development Program. Okay, we'll go to the next slide. So a couple of changes recently. We've increased the maximum levels of net worth that a business, really a person, can have to apply and be included in the program. So this is a pretty significant change. It was $250,000 before this. We hadn't changed it for like 3 decades. So we finally made the adjustment. So the window, if you were close to that net worth level before, you've got more space there. We've also adjusted the retirement accounts out of the net worth calculation. So that gives more space for a person who's started to accumulate some net worth to be able to still be able to get into the program. One of the other things that we work a lot with the other federal agencies around is making sure that we have work available that is set aside and designated for 8A program participants. There's a little tagline that sometimes you'll hear us say, or you'll hear people talk about, which is once 8A, always 8A. And this is how this comes into play. Firms who get 8A contracts, they generally like them, they generally do well, they learn, they grow, they get revenue, they're able to employ people, and it's all good news. At some point, as they near the end of their term and their time in the 8A Business Development Program, that contract will either sunset or maybe up for renewal. And sometimes the agencies will say, hey, we want to actually keep ABC company on as the contractor for this award because they've done great work. Well, if the ABC company is graduated, we can't keep them on, because just like ABC company benefited from that contract, we want XYZ LLC or others to come in to be able to have work that they can perform. And this sometimes is a challenge for agencies because they get happy with the business and they want to continue. It's easy, everybody understands, it works, all's good. But there is that transition process, and we always want to make sure we're doing what we can do to keep making sure work is available in the program. There's this thing called business activity targets. Is a term that, unless you're involved in the 8A program, you probably never really heard much about. But basically what this says is we are weaning businesses off of a reliance and over-reliance on contracts in the 8A program before they graduate. We used to not have this requirement. And the catch here is that what happened was businesses would get so happy with their 8A work and get so comfortable with their 8A work that they had a bad balance of 8A and non-8A work. And so once the year 9 happened and they were out of the program and those contracts started to cease, they ran into a situation, those businesses, where they didn't have any revenue after their 8A business likely ended. And in many cases, that also really led to the demise of the companies. So now we start to wean you off such that by the time you graduate from the program, 55% of your revenue should be from a source other than 8A contracts. And so we're still managing that. We're still taking care of that part. We're just handling it more directly at the district office level. And we can go to the next slide. So here's the other big news about the 8A Business Development Program. I'll go through this part a little bit quicker because I know everybody's not in the 8A program already. But because of the COVID-19 pandemic environment, we ended up in a situation where we felt like it was best, and we got support from Congress also on this, to create an extension. Congress actually in the Economic Aid Act passed legislation right at the end of December saying that SBA is authorized to give a 1-year extension to firms in the 8A Business Development Program. So essentially almost taking a 9-year program and adding an extra year to make it a 10-year program. It's only for certain firms and it's time specific. So if you're in the program as of January 31st, that 1-year extension is available to you unless you decide you want to decline it. Now, if you were in the program, you could have been qualified, but you voluntarily withdrew, you were suspended, something else happened, and you were removed from the program, it's not eligible to extend it. And then firms that talked about the business activity target a minute ago, we're still going to continue with the same business development activity or business activity targets. We're not adjusting those for a 10th year. We go on to the next slide. There's a couple more elements to this 1-year automatic extension. So here's the for graduated firms. So if you were in the program as of March 13th, 2020, and we use that date because that's kind of the start of all the COVID Recovery Act related items, and you graduated the program before January 13th, so just really 2 weeks ago, you're eligible for readmittance into the program. And you just have to let us know, and you have to let us know by the 15th of March. And you still have to meet all the program requirements. And then if you're admitted into the program, we're basically adding a year to what would have been your end of the program date. So in this example, we're using April 15th. You might have normally ended the program on April 15th, 2020. Now it would be April 15th, 2021. Okay, we can go to the next slide. Alrighty, I want to also take a few minutes at least to cover a couple of things about the Economic Aid Act and the CARES Act. This relates more to financing, financing loans and programs that we have. So I want to walk through a couple of these. I probably won't go through all these slides in depth, but we'll cover some of them now. A key footnote that you'll notice at the bottom of this slide and all the slides, we can go to the next one, and all the slides here really relates to the fact that this information is always subject to change. If you got involved in any of the CARES Act funding programs last year, you probably learned to go to the SBA.gov as well as the Treasury.gov websites because they're contain many of the changes, the interim final rules, the updates on different Q&As that were established. And so you'll note that this information is current and effective as of the 14th of January. We know that there'll be some adjustments, there'll be some new things that come out, and we just want to make sure people know if you're looking at this slide a month from now and you say, hey, but it said on this slide, just remember this slide is good as of the 14th of January. by a month from now, there might be some things that are different. So just include on your favorites on your browser that you're going to look at the SBA.gov website on a regular basis to continue to get your updates. So here's the big deal. Paycheck Protection Program, PPP, is back up. We have a first draw option for businesses that didn't get funding before. And we have a second draw option for those businesses that did get money the first round and still need additional funding. The economic injury disaster loan, this is one we do directly through our SBA Office of Disaster Assistance. We've gotten an extension. This program literally was set to sunset on December 31st, 2020, and Congress gave us the authorization to move it out an additional year. So we still have funding available under that program through December of 2021. There's also been a series of adjustments to our lending programs. Most notably, they're set up to be able to do some things quicker. A couple of our express-related programs, we've got a new 504 Express program, which is really for your large equipment, building purchases, physical plants, things of those natures. But we also got a lot more guarantee capabilities. So SBA guarantees the loans that businesses have with banks. We don't directly, in that environment, make the loan directly to the borrower, but we're facilitating an advantage for the lender to be able to say, yes, this is a loan that we can do because we've got the support of SBA. So our guarantee percentages were increased as a part of this to make it easier for those lenders to get to a point where they can nod their head instead of shaking their head. Another really, really key one that really didn't get as much publicity last go round is the SBA Debt Relief Program. And what this is doing is it's paying borrowers principal and interest payments for anywhere from 3 to 6 months if they take out a new SBA guaranteed loan or a new SBA loan. And I can talk a little bit more about that in a minute as well. So this is pretty huge because it's giving borrowers a chance to be able to get access to credit and not have to make those payments. And those payments are maxed out at $9,000 a month. So if you happen to get a loan and it's maxed at the $9,000 a month and you get 3 months where you're not paying, 9 times 3 is $27,000. Most businesses would be happy to not have to spend $27,000 if they didn't have to. So let's go to the next slide and I'll try to run through these a little quicker so we have time for a couple of questions and answers. All righty, for the PPP first draw, the big deal here is you got to apply by March 31st. We've got additional flexibility for covered expenses. Excuse me 1 second. Noticing that my battery is way low. Sorry, I should have taken care of this beforehand.
That's okay. While you're getting your battery up, that's fine. Everyone, we do have some questions that have come in, and we will try to answer those as soon as the presentation has completed. So
Okay.
Other questions, send them right on in. Thank you.
All righty. Excellent. So we're back up. The other real big point here is the covered period. Before, when we did this the first year, it was first 8 weeks of a period that you had to use the funds, and it went to 24 weeks. We've created flexibility, so now the borrowers have the ability to set that based on the needs that they specifically have. Next slide, please. So here's the catch for second draw. You have to still be a small business. 300 employees is the barometer we're using. Here, you've already gotten a PPP loan the first go round, And you have to demonstrate that you've experienced a 25% decrease in your revenue. And this is gross revenue. This is not your net bottom line. This is your total sales or total revenue, if you want to think of it that way. And so what this means is we will provide funding through our guarantee, through our lending partners, banks and lenders, a maximum of 2.5 times your monthly payroll cost, up to $2 million. So it's a $2 million cap, and the percentage again is, or the factor is 2.5 times your monthly payroll cost. If you happen to be in NAICS code 72 series, which is food services, accommodations, hotels, restaurants, those kind of things, we're actually doing it at 3.5 times your monthly average, but still at a $2 million cap. There's an application specifically for this program. You'll find all this information again on our SBA.gov site, but we'll go to the next slide. And again, so I think I probably covered the eligibility already, so we'll go one more slide. And for forgiveness, again, there's a whole forgiveness process. The whole idea with forgiveness with this PPP loan program was to try to make sure we were providing funding to businesses that really needed it to pay their payroll. And as long as they were using the money for that purpose, the goal was to make sure that we were going to be able to help make that a forgivable loan. So this is almost a grant program rolled into a loan program, if that makes any kind of sense to you. Last year, we ended up deducting any economic injury disaster loan advances from the forgiveness payment. And that went to the detriment of the borrowers. So we've corrected that. That's not happening this year. The forgiveness of the PP loans is not being considered as taxable income. Again, consult your IRS folks for that one. And we've also expanded some of the categories of forgivable expenses to make it a little bit more flexible and a little bit more realistic for some of the issues that the businesses we're facing. Next slide, please. So if you're interested in these programs, you know, the loan programs, you can consult your lender. If you got a PPP loan last time, you know, it's highly recommended that you jump right back in and go back with that same lender. They've already got a lot of your documentation and information, but you don't have to. You can go to a new lender if you've already moved on to a new bank or a financial institution. Again, SBA.gov PPP is a place for all your information about these loan programs. Stay close to that information. Our resource partners are here to help you. And if you've got questions, our district office main number is listed there, along with an email address to which you can send questions, and our team will respond to those and help to get you in the right information. Let's see, do I have another slide or two, or is that it? We're at the question slide. That's good.
Fantastic. Antonio, that was great. I'm going to ask if you don't mind putting on your webcam. I didn't want to interrupt your presentation at all. I'm going to turn mine on too. And we're going to try and take a few of these questions that have come in. And if others have questions, I suggest that they go ahead and send those along or raise their hand so that we can get answers to some of the folks concerned. Here we are.
Okay, is my webcam showing okay?
Oh, there you are. Yes, let's see if we can get both of us up at the same time. All right, very good. Now, I sent a couple of questions already to you through the chat, but if you'd like, I can read those again.
Oh, sure, that would be helpful.
Okay. All right. Going back to joint ventures for a moment, if you will. Some GSA contract vehicles allow it, allow joint ventures. However, the question is, are you saying that SBA will not approve joint ventures for competitive contract vehicles such as Polaris or Polaris? I'm not familiar with that vehicle.
Yeah, that is correct. So we had a series that we were already in. So when the rule came out, it's not like the world had stopped beforehand. There's a lot of these scheduled items that were out there, and so it definitely affected what was already in the works. So, for example, STARS 3, we were processing a lot of joint ventures in our office for STARS 3, and we pretty much worked through those. But because we had a rule that came into place, if a new requirement came available for Polaris or anything else after the November 16th deadline, we've already then at that point officially notified the world, so to speak, that we are not actually doing the approvals of joint ventures. So that's a requirement that we won't fulfill in terms of approving. But if you need to have a joint venture approved or established, then that's something you do directly on your own with your partner and along with the attorneys.
Okay,
And
thank you.
I can't emphasize enough. Please, please, please go to our website. Under Mentor Protege and Joint Venture, you'll see a reference to our guide document for the joint ventures. It makes life so much easier for you as a small business if you follow that template.
Okay, thank you again. The next question, can you apply for a PPP loan with more than one lender simultaneously?
You probably can, but I don't know that that would be an advisable thing because you're only going to get one through. Now, last year, related to it, people were, did my audio go out?
It did. Could you repeat
People were
the
coming
beginning
in
of
for the
what you were saying?
PPP loans very fast. We blew them extremely quickly. And we don't expect quite the same activity this time. So if you're working with a lender, I would recommend you work with a single lender, because once we get at our agency a second request for your tax identification number and your business name, it starts to draw questions as to, is this something that's legitimate or is this a fraudulent activity? And we're trying to manage also the fraudulent activity volume.
Oh, very good answer. Thank you. Where can folks find more information about being matched with a mentor? Now, I know you don't match people. I want to say first and foremost, one of the things that Mid-Tier Advocacy tries to do is bring folks together so that they can do business with each other through the networking opportunities that we provide with our webinars and prior to COVID with our in-person business focused breakfasts. But organizations, I think, are really good places to begin forming relationships with other companies. But what's your answer to that question, Antonio?
Well, I mean, that is a really, really great place. Sometimes you can look also at, maybe you're really looking at a mentor for a certain kind of skill set, or maybe you're really trying to angle towards a certain kind of contracting activity or area. And so if you're doing your research on where those contracts for, let's say it's HHS, one of the divisions in HHS, where those contracts are going, and you see that there's a business that's been doing very well there, it might make sense to try to reach out to them and build some kind of relationship. But again, it's got to be a relationship that you trust and that you can develop trust in. Sometimes it's great if you have a chance to be a sub or a partner, so to speak, on an opportunity, because at least you get a chance to see how they work. Sometimes people sound a certain way in a conversation, but when you work with them, you find out, well, they operate a whole lot different than they talk. So you want to be able to understand those things as well.
So true. Well, I have a couple more questions. Where can we get more information regarding the rule regarding approval of joint ventures?
SBA.gov is always the first source you should go to. The other one that's always extremely important is our regulations. If you're in the federal contracting space, at some point you're getting familiar with the Federal Acquisition Regulations, or FAR. You also want to be familiar with 13 CFR, which is the Code of Federal Regulations that governs all of our government contracting programs. And then there's also a site referred to as regulations.gov. And that's a really important site. It's one that people don't necessarily gravitate as much as I think they should. But anytime we are thinking and then writing about something we're thinking about changing as a rule, we put it in the regulations.gov. And in regulations.gov, we will list what we're anticipating doing, what we think the impact of that change is going to be, why that change we felt was necessary. And you, as a independent person, a business owner, have every right, and in fact, I think it's almost like a duty, to read that and then send us a response. And you can say, I see you're making a recommendation to change this aspect of a joint venture program. I don't necessarily think the benefits that you're thinking are happening are going to be the ones that are going to happen. Here's what I see different. And we take that information, we read every single one of those pieces of feedback that we receive. And based on that, we then are able to come back and say, hey, maybe we should be looking at this regulation a little bit differently than we are, because perhaps we've missed something. So your voice is really important into our regulatory guidance.
Thank you for that. We have a couple more questions, and I think that will probably bring us right up to the 1 o'clock hour. This question is, how does a small business who received the EIDL advance apply for the difference of the $10,000 grant if the business is in an opportunity zone or low income area based on the new guidelines?
Right, excellent question. So we're trying to rectify that, and there will be a way that you can come online. That part is not fully up and running yet, but you'll be able to come online and check your address in a sort of a portal that we'll establish, confirm that you're in a low income census tract, and there'll be instructions on how you can actually resubmit or submit a request for the adjustment. The goal is to make sure that maybe you only got $2,500 out of the potential $10,000 to be able to get you the additional $750,500. I was about to give you $750,000.
And we all will sign up then.
So 7,500 plus 2,500 equals 10,000. That would have been the goal.
Excellent. And our, let's see, there's one more. Is there SBA financial support for the mentors and proteges?
From a financial perspective, if you're saying like, do we provide funding or do we do anything of that nature? We don't. It's all about strengthening the business acumen of the mentee through the relationship with the mentor, helping that mentee be smarter about some aspect or aspects of their business environment. Maybe it's about how to put proposals together. Maybe it's about their financial modeling. There could be financing support that a mentor could provide, but it's not something that SBA directly does. It could be something about how you establish your HR practices. It could be a lot of different things, but if you think about it as a business owner, you're trying to build a great foundation from which you can grow your business to whatever levels you desire to grow.
Excellent. Were there any parting, I guess, thoughts or advice you have for, again, we had at least half or 20% or so of the folks who are interested in getting involved in the Mentor Protege program. We've always, Antonio, suggested it to all size businesses because it is a way that you can continue to grow your business, whether you're small or you're considered mid-size or the large business partners. But What would you add to that for business growth?
Well, I think it starts with a fundamental question of what are your gaps? That you can go into a relationship with anyone, but what are you trying to accomplish from that? It starts realistically with a good assessment. You can do a SWOT analysis, strengths, weaknesses, opportunities, and threats. What are the strengths of your business? What are your weaknesses or areas that you really want to improve? Make note of those. Where do you see opportunities, but maybe you see opportunities, but you don't have everything you need to be able to capitalize on those opportunities? Or what do you see about your business and its operating environment that creates a threat to your existence or to your ability to achieve the goals that you want to achieve for your business? Take a measure of yourself as a business owner and as an entity, and those places where you probably put the little red flags, or you circle it in red or something that says, "Ooh, we better take a look at this." Those become, to me, some of the formula items of what you might be looking for in a mentor relationship. So you can have a mentor who could be really, really great in proposal writing, but maybe that's already your strength, and you're really trying to shore up some other aspect of your business. Maybe it's about your internal operations, or maybe it's about how you bring diligence to your operations. That initial mentor may not be the best one, but it may be somebody who's got a strength in that other area. So you want to look at it that way.
Well, that is excellent. And unless anyone else has any other questions, we can actually end our webinar early. I would like to thank everyone that tuned in, and to note that the slides will be available later on, either later today or tomorrow. But we host these Business Insider webinars at least once a month, and we couldn't do it without the amazing support we received from folks like Antonio Doss, his staff, Levo Suin, and others. So I just want to thank you, and I look forward to having you back soon, Antonio. You are just a wonderful presenter. Thank you so much.
Well, Tanya, thank you, and good luck to all the participants today, too.
Thank you. Everyone stay safe.
Okay, bye-bye.
Bye-bye.